With exchanges relocating, NUPL soaring, and premiums recovering, is Bitcoin headed straight for $130,000? Trump the scars from cutting leaks are still painful. Is Trump ETF a life-saving straw or a second harvest? Coinbase and PayPal launch stablecoin yield plugins, while banks threaten to amend the Genius Act. The right to issue additional coins is completely cut off. OKB surged by $137. Is it a flash in the pan, or the ascension of a new king? Bitcoin and Central Asia ETF breaking the ice, but BitGo, he is the one who calls the shots behind the scenes. Is Kazakhstan losing money this time?
Thursday, August 14th, BitcoinTV English channel. Where is the coin chain? I'm Michael, starting with the 24-hour cryptocurrency headlines. Bitcoin is really running out of steam this time. After a month of sideways trading, it broke through $124,000 yesterday, setting a new all-time high. Ethereum, not to be outdone, surged to $4,780, setting a new record. Exchange data shows that Bitcoin has only seen 2 significant net inflows in the past month, both driven by short-term selling. The rest of the time, it has been almost entirely net outflows, with holdings flowing into cold wallets and long-term holders. August 13th was even more dramatic, with 6,951 coins, or nearly $860 million, flowing out in a single day, a truly massive move. This demonstrates continued buying from institutions and long-term investors. If this momentum continues, BTC is likely to maintain its strength during pullbacks and consolidation, perhaps even pushing towards the $130,000 mark. However, in the short term, we still have to keep an eye on the signals of large net inflows. Otherwise, a wave of selling pressure will come and the roller coaster feeling will come. The current net unrealized profit and loss (NUPL) is 0.5689, indicating that most people are making money on their coins. Historically, once NUPL reaches a high, the bull market is nearing its peak. 2017 saw a major peak, and 2021 saw a double top. This cycle appears to be heading for a third peak, but the price is no longer soaring, but is instead climbing step by step. The reason is clear. Institutional funds, especially the US Bitcoin ETF, are continuously injecting capital, increasing market liquidity and stability. The upside is that the chance of an overheated or sudden surge is reduced, but the downside is that the amplitude of each upward movement is narrower, prolonging the pace. The bull market may last longer, but we must monitor the signs of a reversal from NUPL's highs. Once this occurs, it may be the time for major investors to start cashing out. Since April of this year, the Coinbase Premium Index has remained firmly in positive territory. Large US investors and institutions have been quietly accumulating shares, laying a solid foundation for the market. Historically, a rising premium often precedes a price acceleration. For example, Bitcoin surged from $20,000 to $64,000 from late 2020 to early 2021, and a similar trend occurred during the ETF boom in 2023. While the current premium is only plus 0.048, not particularly dramatic, its sudden turnaround from negative territory suggests a return of market confidence. Meanwhile, the premium in South Korea is also rising, while funds are still flowing out of European exchanges, suggesting a global recovery, not just a US-only surge. Bitcoin is now approaching $123,000. Coupled with the recent wave of positive news from both the macro and crypto markets, this rebound in the premium could signal the tentative start of a new rally. If continued inflows and a positive premium persist, Bitcoin's upward trajectory could accelerate. Please like and follow us for the latest developments in the cryptocurrency, blockchain, and mining circles within the past 24 hours. Click the bell to join our channel and become a member. You'll receive your membership code Monday through Friday. Trump's meme coin TRUMP took off at breakneck speed upon its debut, reaching a market capitalization of $15 billion in less than 5 days, before plummeting to $8 billion. After reaping the profits in 2 days, Trump began to shift the blame, claiming, "I'm the founder, but I don't really understand the price. I heard it was hot, but I didn't look closely." You might believe that, but I don't. After all, the money that exploded in the market during those few days was already in Trump's safe. Just when everyone thought Trump was done for, he's making a comeback.
Osprey Funds and REX Shares recently submitted new ETF applications to the US SEC, intending to launch ETFs covering meme-related coins such as Trump, Doge, and Bonk. Each fund will allocate at least 80% of its assets to the corresponding underlying asset. Bloomberg ETF analyst Eric Balciunas believes this will bring greater exposure to the Trump coin.
Because you have those policies that may be reflationary, but also the potential for lesser regulation. So just a significant amount of capital that was deployed into the equity exposures in the ETF marketplace.
Despite the fund company's application for a Trump coin ETF being shoved before the SEC, the coin's price hasn't shown any signs of improvement. It's currently trading at just $9.75, more than half its peak. This tactic is no new to Trump. Truth Social's Bitcoin ETF was recently delayed by the SEC, and now he's rushing to launch a new product. Whether Trump coin can recover remains uncertain, but consider that, having just passed the Genius Act, he's already given his own coin the ETF aura. If he can truly convert voter enthusiasm into votes, it's a sure win. This trend extends beyond Trump. A family of meme coin ETFs is taking shape, including meme coins like Doge and Bonk. ETFs are extending their reach beyond legitimate blue chips like Bitcoin and Ethereum to sentiment-driven altcoins, lending them a veneer of legitimacy and offering them a gateway to institutional funding. However, with all the hype comes risk. Once this kind of bull market starts, it may really become a copycat ETF bull. With institutional funds rushing to the front, blue chips stabilizing the bottom line, and emotional coins playing at the peak. But the speed of the bubble may also be dizzying. If you fail to keep up with the rhythm, you will become a high-level bag holder in minutes. Last month, the Genius Act was passed in the US, establishing regulations for stablecoins. While payment-oriented stablecoins are legal, issuers are strictly prohibited from paying interest, posing a regulatory risk by becoming quasi-bank deposits. However, some are defying the law. Coinbase offers a 4.1% annualized yield on USDC, and PayPal offers a 3.7% yield on PIUSD. Although neither issuer is a creditor, they enlist the help of friends like Circle and Paxos to deliver the returns directly to your wallet. This has bankers fuming. This is a blatant job stealing.
Several U.S. banking groups have written to Congress, requesting amendments to the Genius Act. They point out that while the act prohibits stablecoin issuers from offering interest, it does not cover affiliated companies such as crypto exchanges. Citing an April Treasury report, the Bank for International Settlements, BPI, warned that if stablecoins could offer returns like deposits or money market funds, it could trigger an outflow of up to $6.6 trillion in deposits.
And millions of Americans have made it clear they want to have choice in the financial system that stablecoins in particular offer. This is critical infrastructure for payments that people make, not only within the United States, but across borders all over the world. And that recognition by U.S. law is critically important for confidence in this market and for major institutions to have the confidence to know that they can make investments in this technology and know that it will be recognized by U.S. law.
Currently, the global stablecoin market only totals $271.3 billion, barely a sliver of the $22 trillion US M2 money market, accounting for only 1.23%. However, the US Treasury has stated that it could soar to $2 trillion by 2028. With the recent signing of the Genius Act, the White House and the SEC have handed a major boost to dollar-denominated stablecoins, signaling a surge in growth. Interestingly, the bill specifically prohibits issuers from paying interest, while ignoring the incentives offered to exchanges and payment companies. The reasoning is likely to legitimize issuance first, while preserving the secondary market's capabilities. After all, money earned interest in banks, so why shouldn't stable coins?
Directly permanently remove the right to increase issuance on the chain. OKB, is this an upgrade from a platform currency little brother to an anti-inflation big brother? Kazakhstan is responsible for the platform. BitGo with private keys in hand. Central Asian investors rejoice in freedom in shackles.
Cryptocurrency exchange HKEX has been on a tear lately, first rushing to go public in the US. Upon returning to the US market in April, it underwent a major management overhaul, hiring a team of regulatory savvy and Wall Street veterans. The US team has grown to 500 members, and the exchange has secured operating licenses in 47 states. Its product offerings are also impressive, with 14 advanced strategies, including contract martingale trading and the launch of over-the-counter derivatives. The exchange has also been actively developing its technology, collaborating with Polygon to launch the ZKEVM Layer 2 network, X1 testnet. As for the recent traffic driver, it has to be the official announcement of the X layer upgrade and OKB optimization plan.
According to the announcement, OKX suspended OKT trading at 2:10 p.m. on August 13th, but OKT chain continued to operate normally. OKB withdrawals to ETH-L1 were suspended starting at 3 p.m. At 10 a.m. on August 15th, the platform automatically converted user OKT into OKB. At 2 p.m., an on-chain burn of approximately 65.26 million OKB was conducted, locking the total supply to 21 million, preventing the recirculation of tokens from historical projects. At 2 p.m. on August 18th, OKX upgraded the OKB smart contract, removing the issuance and burn functions to stabilize the supply structure.
We need to add a compliance layer to crypto wallet because we want to service millions, even billions customers. Without compliance control, there will be a lot of challenge like terrorism finance, money laundering.
OKX's move is a two-pronged approach, burning OKB to increase scarcity while simultaneously upgrading its contract to completely lock in supply. Upon the announcement, OKB soared to $137. Although it has since fallen back, it remains remarkably strong. For the OKX ecosystem, this move not only improves the economic model for OKB as a gas token, but also makes X-Layer more stable and faster and reduces transaction costs. It also piques developer interest, attracting more people to build projects on this blockchain. By optimizing both its technology and economics, OKX's competitiveness has been turbocharged. The question now remains whether it can maintain this momentum and deliver further market surprises. Kazakhstan has been a true top student in the crypto world in recent years. Not only is it a major global mining player, it also frequently launches new crypto financial products, aiming to smooth the path for cryptocurrency compliance in the country. Kazakhstan boasts a prominent exchange, the Astana International Exchange, AIX. Founded in 2017, it boasts impressive backing, including the Astana International Financial Corporation, the Shanghai Stock Exchange, the Silk Road Fund, and Nasdaq as shareholders. By July of this year, AIX was generating $130 million in monthly trading volume. This Wednesday, however, a major incident occurred, sending the entire cryptocurrency industry into a frenzy.
But frankly, the regulatory changes make it a lot easier. Having ETFs available make it a lot easier.
Font Bitcoin Spot ETF BETF listed on the AIX Exchange Traded Fund AIX. It became Central Asia's first spot Bitcoin ETF. Managed by AIFC registered Font Capital, the ETF's Bitcoin custodian is BitGo Trust, whose U.S. subsidiary provides safekeeping. This marks the first time that institutional-grade Bitcoin investment is available to Central Asian investors. BitGo Trust previously provided custody for major U.S. Bitcoin ETFs, such as ARK Invest and 21 Shares.
The launch of the BETF has ushered in a new era for the Central Asian crypto market. Many investors previously blocked by traditional finance now have access to compliant Bitcoin channels, and the barrier to entry has been significantly lowered, allowing retail investors to indirectly get on board. BitGo's involvement is a significant plus for Kazakhstan, not only boosting its international credibility but also attracting more foreign investment, further solidifying its position in the crypto community. However, this core infrastructure is still controlled by a few major players. Excessive concentration is not always a good thing. If something goes wrong, the risks can be overwhelming.
AI boss Elon Musk on Wednesday unprecedentedly praised rival Google, saying it has the greatest computing power and data advantages outside of real-world AI, and is most likely to be the boss now. But this class leader may be replaced in a few years. Shah, the new head of Coinbase coin listing, said that Coinbase DX has opened its doors to welcome 1% of users. The remaining 99% of friends, please wait patiently, and it will be your turn slowly. Token 2049 officially announced that HKEX CEO Su Mingxing Star will appear at the Singapore Summit on October 1st to 2nd, bringing the crypto circle's script-killing rush to 1 billion users. Prosecutors in Northern California cracked a cryptocurrency money laundering case in which 8 people swindled $1 million. The suspects have now been arrested and are on bail awaiting trial. They will appear in court in Oakland on August 25th. In the past 24 hours on the Solana token issuance platform list, Pump.Fun topped the list with 70.6%, Let's Bonk ranked second with 17.9%, and Bags ranked third with 6.33%. The rest can only watch.
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the member wealth code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.